The S&P 500, the Nasdaq 100. You saw most of the downside yesterday. I think today set us up for continuation as we look in the market. I'm going to go into the charts here in a second, but I want to make something really clear. We talk about this is what we had to talk about with Jerome Powell, the Fed yesterday, what it means for you, what it meant for the market, and what it means moving forward. So I'm going to give you my quick breakdown. If you don't want to listen, just skip ahead till you see the chart. You can just skip ahead. That's what you're interested in, right? Okay. My viewpoints on Jerome Powell and the Fed very quickly. I recommend, if you're not following on Twitter, to follow there because I posted this in detail yesterday a little bit here. So anyways, we'll go back. Okay. So my opinion, number one, what happened yesterday? Powell, they cut rates, which was expected 0.25. He laid the framework that it's not expected to get a lot of rate cuts in 2025, right? We'll talk about why. The next thing, we knew the elephant in the room. We knew what would be bad. It was going to be Donald Trump, number one, and his fiscal policy of tariffs. And we knew that would collide with the Fed. We knew that would eventually become an issue. Now, based on the last meeting, we didn't really expect them to talk heavily about this because anytime Trump or his fiscal policy got mentioned, he said, we're not going to discuss that. I mean, go watch the tape, right? This meeting was a little bit different because the Fed acted directly on it, okay? And so why? If you look at the way the Fed works, first of all, it's not just Jerome Powell. Sometimes we see and we hear the word the Fed and we think that's just Jerome Powell, right? There's a whole bunch of people behind him as well that vote and make their own estimation of the market as well. There's a handful of them, right? And so he was not talking for himself. He was talking about the rest of the group. And he said that there is some clear concern in the group, the Fed, of Trump's fiscal policy. It was even compared back to 2018, give or take, during the taper tantrum, right? In 2016 fiscal policy concerns, right? And that is the interesting part here. Now, I don't like, number one, that they're comparing it to that. That's not a good thing. But the idea here is when we look idea here is that they are more cautious going into this. Now, short term, what does that mean? Like the bad news is that you're not getting this euphoric feeling of cut. Why do we want cuts, by the way, in the market? Cuts are the one thing that we have to assume will try to stimulate the housing market. The housing market, which has remained relatively hot. You may see less buyers out there, but you're not seeing home values decrease, right? And I don't think that will happen because I don't think we're going to be in that type of recessionary period, okay? So that's important to understand. And then some loans overall for small mid-cap stocks as well. It's harder for them to loan money at this rate right now, just like it's harder for me and you to get loans as well right now, right? Just where you're going to pay them that interest. Now, the next thing here, which is very interesting. Again, I'm not going to read all about this. I just listened to what Powell said during the live, so you can go watch it for yourself. But the interesting thing about it is despite Powell's concerns about inflation, or it wasn't even concerns, it was the progress of inflation that he was concerned about, right? Despite that, he was asked repeatedly, what was his opinion on the market? And his opinion was a very clear and strong, I think this year could be better than last year. He said at the last meeting that people that he's talking to, and again, it's worth mentioning that Powell's not talking to Reddit subs like you might imagine, like most of you are. He's not talking to Twitter followers. So like me, like I'm not talking to Twitter followers, right? He's talking to people with a little bit of knowledge, right? I like to imagine at least. And he continues to say, I believe this market is set up to be as strong, if not stronger, going into this year. And I'm just saying from a step back point of view, okay? And this is very important. Now, again, I can acknowledge that the chart doesn't look incredible in the short term, okay? But when we zoom out, okay, this is July highs. This is your Nasdaq 100. Now, you had a really great run back in 2020 through like 2021, give or take, right? It was awesome. But one could argue that this run is almost better than the run that we had back in 2020 through 2021. This run has literally lasted since December 2022 through December 2024. That is a 2-year long run. 2 years of just pumping, baby. Pumping and coming. I'm coming at home. I'm coming in the gym. As Arnold says, right? That's what this was. This was amazing. Okay? And so I want this to be understood. That, yeah, we might pull back. We could pull back. Whatever. But you're still in a bull trend. You have to identify that. Like, we can't really get to this point of like, okay, this is really bad if we're not even below 2021 highs. Like, you know what I mean? Like, let's talk about that, right? So those are things to think about. Now, again, I have had this notion that I believe that we would get a dip going into the early parts of Trump administration, again, because we knew this clash was going to happen, right? The first question asked about Powell and Trump was, Powell, are you going to step down because Donald Trump said he wants to fire you? Like, obviously, it wasn't going to be a cohesive marriage and relationship between these two. Surprise. So that's where we're at right now. Now, looking at the market. Again, if you don't follow on Twitter, then you might not have seen this. I posted it on Twitter, though. This is your judgment level, okay, on the Nasdaq, 21,500, give or take. Okay, futures rolled over, so do the math for yourself. I don't care. Okay, that's where you're at. You start breaking below the higher low trend that you've kind of remained and held since going back into August, which, again, you have held this higher low trend. It's worth mentioning. You continue to hold this, or if you break below. If you break below this, I would be looking for downside towards the 200 SMA eventually. I don't want to talk about that yet. It's like 1,500 points away. That'd be crazy to talk about, but that's something you could be looking forward to or looking for. The other area of the market that's getting hurt right now is the Dow. I would argue the Dow is the weakest overall part of the entire market right now. Coming into 42.56. Again, if you guys are not in Discord, I know I haven't been posting videos recently. I'm going to get back to being active, but this isn't like my main focus anymore. I'm going to be totally honest. I love like the subscribers. I love Twitter and all that. Like I'm going to stay on Twitter a lot, but this YouTube channel, I don't know what I want to do with it yet. I really don't. My second YouTube channel, I've really grown to like making that content educational and actually having a lasting impact. I don't think the stuff here, it's more of like this is more like a TV show, right? And I don't know if I want to do that. So I don't know. Twitter, you can always get a hold of me or see my charts, things like that. Doesn't take too much effort. I can just post it at the end, right? Anyways, level you're looking for here. In Discord, I was very clear this morning, okay? Again, every morning get my futures rundown, stocks I'm liking, etc. This morning, like I've said, the weakest sector easily. Under 42.55, looking for 42.2, then 41.6. Again, the levels have all been here. We're looking for the downside, etc. Okay? So again, you kind of just range sideways for a bulk of the day. And by ranging sideways, you had a bounce, and then you fell back down. In my opinion, it looks like consolidation before another drop right here, right? And again, looking at the Dow, I'd be looking for almost the 200 SMA as a most likely scenario. ES, what's happening here? You're sitting on top of our supports as well, right? You break this, you're probably coming down to 558.56, right? And then the 200 SMA after that, which you have a long way to go for that, but you've had some volatility over the past day or so. So worth mentioning. Another area that I'm going to talk about too is semiconductors, which are getting decimated. Semiconductors are in trouble. You're getting back below your key level of 239 and you're below your 200 SMA as well. This is concerning. So in the short term, you don't look good. I'll be brutally honest. You don't look great. But I do believe the market as a whole doesn't have a lot of signs of weakness. GDP outpacing expectations this morning. That's why you bounce. Unemployment claims are still solid, right? These are things you have to be looking at. And as long as inflation doesn't start to surge, I don't know how you look at the market from a bearish point of view. The other point on top of this, despite the tariff concerns and the battle between the Fed, I personally believe Trump is going to be trying to push and stimulate the market the entire time. Okay? I'm just saying. We'll see, but that's my opinion as well. So as a whole, what I'm looking at, if you're looking at SPY, you're looking at Qs, I think you're doing, the levels are clear and easy. Like, I don't think you have to do too much work here. Like, you're clearly just holding at, 586. You break 586, I'm looking for a gap fill down. And this is going to be ugly. Like, I'm going to tell you right now. Gap fill's down at 576.6, but I'd be looking towards 578 to be just conservative, $8 move to the downside. Going into Qs as well. If you're looking at that, you're already breaking down. I'd be looking towards 507, 508. Again, $6 give or take there as well. I can go through stocks. I don't really want to. I'll post stocks and stuff on Twitter, but that's my real viewpoint here on the market. The other big concerning thing here too is what's happening with yields. Yields are getting back up, right? After FMD, not good, right? Before FOMC, you were bouncing, but FOMC, you popped a Viagra. Like, this thing went crazy. So again, still a lot of strength there as well. So these are the big concerns. Breaking back out on the 30-year, breaking back out on the 10-year. Not a good look. Okay. So definitely things I would be watching and am concerned about in the meantime. If I'm looking at trading downside right now, I'm looking towards weak names. Okay. Now I will say today for myself, the only thing I traded was AVGO, and it's really just grabbing and trading the momentum back to the downside here of what I've done. I've traded it yesterday. I traded it today. And I'm not going to lie. If we come out weak tomorrow, I'm probably going to try to trade it again to the downside towards the gap fill. I don't think you're going to fill a gap in one day, but we'll see. So again, what I'm watching for there, names like AMD, weakest names out there in the market. It's probably not a great idea to start shorting the strongest names such as Apple, Microsoft, even maybe Meta. Like, do what you want to do, but the risk to reward isn't as good as shorting the weaker names and how they're moving down right now. So again, as I look at that, that's kind of my mentality going into this as we speak. I will also say the only upside to trading the downside right now, as far as your portfolio growth, is the way this is how I think about it. You are still operating in that bullish trend. However, you're getting really good volatility. So what does that mean? I am taking profits pretty quickly. I am not trying to swing downside trades. If I was going to swing anything, I would be buying dated calls, in my opinion here. But you are trying to grab a falling knife at this moment. You found some buyers on the day, but I'd be an idiot to tell you that I think the market's just going to recover from here and go straight back up. It looks like you want to dip. I'm going to tell you that right now. I'll have more updates on Twitter. If you're interested as well, My Funded Futures is who I use for my funded trading. I use them and I use Top Step. I'm going to let you guys know, though, again, this is going away. Their starter accounts, I think they're raising the price to the fifth. They're raising the price to the 50K. They're getting rid of the 150K. So take it while you can. It's the best deal out there. You can only have 3 accounts live, just to let you know, but do what you want with the information. Trade with whoever you want to use. This is who I use. I appreciate you. Have a good one, traders. Link for everything is down below. See you tomorrow. Maybe not.